As an investor, you want to preserve and increase your net worth, but you've got enemies lurking. Their names are spending, taxes, and inflation. To defeat these enemies, you need to have a portfolio of solid growth stocks. Here at VectorVest, we teach that earnings growth is the engine that drives stock prices higher and higher. How important is earnings growth? Well, look at this. Since 1970, the S&P 500 stocks have annualized a return of just under 11%. Our watch list of the S&P 500 stocks shows the current earnings growth rate at 11%. Coincidence? We think not. So, how do you select the right stocks? And what's the right earnings growth rate? Well, first off, you want to make sure your portfolio grows at a rate equal to at least the sum of inflation and interest rates. If it doesn't, your earnings aren't really growing. If it's true for you, it's true for companies too. Companies face the same enemies, and if a company fails to grow, it dies. To know what the right earnings growth rate is, it's important to understand how to estimate growth rates. It might sound simple, but it can be very difficult. It's like computing gas mileage. To get the mileage of one tank of gas is easy, but can be misleading. Some drivers are very consistent and follow the same routine. Their miles per gallon is very predictable. Other drivers are very erratic, and predicting their miles per gallon is virtually impossible. Companies are the same way. Take a look at McDonald's. McDonald's grows its earnings at a nice, steady pace. So does Google. Take a look at that. So there's very little problem estimating their growth rates. Other companies are more erratic, but you still need to have an idea of their earnings growth. So let's get back to how to estimate growth rates. We knew a system was needed that virtually tailored growth estimates for each company. So we analyze historical sales performance. We analyze historical earnings performance. We take into account for quarter-to-quarter changes. And we use forecasted earnings to target future growth. But just like with the Transformers, there's more than meets the eye. Because sales growth without earnings growth reflects a loss of margin. That's a bad sign. Earnings growth without sales growth reflects cost-cutting, improvements in productivity, and so on. These are good signs, but they can't last forever. So here at VectorVest, we consider three things in our growth forecasts: sustainability, trend, and variability. Let's look at each one. Sustainability. Can the company continue to grow at a steady, predictable pace? Triple-digit gains? Probably not sustainable. Take a look at this. Here inside VectorVest, we've got a watch list of the Dow Jones Industrials, and we show that only 10 of the 30 stocks in the Dow are estimated to grow earnings over 10% per year. It takes phenomenal products, customer service, and management to grow at double-digit rates for years on end. Home Depot and Disney are prime examples. The second thing we consider? Trends. Think about this. Going from high growth to steady growth can be scary to some investors and cause a drop in stock prices. Going from negative growth to less negative growth can be just as important as an increase in positive growth and cause stock prices to soar. So tracking long-term earnings growth trends provide excellent leading indicators of a stock's price performance. And that brings us to variability. Would you like it if your paycheck changed drastically every week? No. You want it to be consistent and grow over time. Companies' earnings should be the same way. We call the ideal company a ruler stock because their quarterly earnings increase at a constant rate. Do you remember McDonald's from a moment ago? Would you say that's a ruler stock? How about Google? Let's test that one out. And here's another one, Priceline. These are all beautiful examples. As you can see, there's a lot to consider when it comes to earnings growth. As a VectorVest customer, we do this analysis for you and give you an easy way to get the stocks you need very quickly. We've got two main indicators to look at. The first one is GRT. The second one is RS. GRT is our calculation of a company's 1 to 3 year forecasted earnings growth rate in percent per year. We consider historical, current, and forecasted earnings data when calculating this. The second indicator is RS, which stands for relative safety. We look at the consistency and predictability of a company's financial performance. Are they meeting and or exceeding earnings quarter after quarter, year after year? We look at debt to equity, sales volume, price volatility, and how long the company's been around. It's easy to understand because it's on a 0 to 2 scale. Anything above 1 is good. Above 1.4 is awesome. Let's get into VectorVest and take a look at the top 5 ways to find great growth stocks. 2 are going to be for aggressive investors, and 3 are for those of you who are prudent to conservative, maybe thinking about retirement, or maybe even currently retired and may like dividends. Number 1, access the stock viewer and sort it by GRT. Here we are in VectorVest. Just access the Viewers tab, click on Stock Viewer, and the default sort is VST. But just come over to the side and click on the GRT column. Aggressive investors must deal with high growth stocks. The risks are high, but so are the potential rewards. These are the fastest growing stocks currently in our database. Notice over here the relative safety column. Take a look at the low relative safety ratings. This shows the risk of dealing with unproven entities. The stocks can move up quickly, but an earnings miss can mean a quick pullback. This risk to reward is perfect for aggressive investors. The stocks listed here with a buy rating are currently moving up, and that may be where you want to start, which leads us right into number 2. Number 2, select the hottest growth stocks. Here inside VectorVest, an aggressive investor would access the Unisearch tab and come over to the left-hand side and open up the Searches Special Searches folder and just slide on down until you find the search called Hottest Growth Stocks. Notice when I run this search, it still finds high growth stocks. Look at that. And they are all rated a buy. These stocks are moving up quickly right now. But remember, the relative safety rating is below 1, so there is some risk and volatility in these stock prices. Aggressive investors can look here for some nice potential rewards. Number 3, premier growth stocks. For you retirees or pre-retirees looking for capital appreciation in some safe, predictable, high market cap stocks, this one is for you. Back here in the Unisearch tab, you'd come over to the left-hand side, and instead of special searches, let's just go to Searches Retirement, and we're going to select Premier Growth Stocks. When you run that search, 3 things should really stand out. Number 1, the high relative safety rating of these stocks, which means the company's financials are safe and predictable, and there is less volatility in the stock's price. Number 2, all buy ratings at the top of the list, which tells you these stocks are in an uptrend. And number 3, the great earnings growth rate. Let's take a look at the earnings on the graphs. I'm just going to come up and click Graph. Let's take a look at the earnings here. Talk about steadily rising, right? That's the first one. Here's the second one, the third one, the fourth one, the fifth one, the sixth one, the seventh one, the eighth, the ninth, the 10th. Pretty good looking graphs, right? And all you had to do is come to the retirement folder and run Premier Growth Stocks. Number 4, look for ruler stocks. This is perfect for finding those stocks that have earnings rising so steadily and consistently you can draw a 45-degree line through it with a ruler. Finding them is extremely simple. Let's take a look. Back here in the Unisearch tab, I'm going to come over, and instead of looking in retirement, we're going to go to the prudent folder, slide on down, and find the search called ruler stocks. These stocks are sorted so the ones with the best combination of relative safety and earnings growth rate appear at the top of the list. How's that for a great combination? The search is called ruler stocks, so let's put it to the test. Let's pull up a graph of these stocks, and let's take a look at the earnings to see if we'd be able to draw a 45-degree line on these earnings. Bottom left, upper right, good. Bottom left, upper right. Next one. Bottom left, upper right. Bottom left, upper right. Bottom left, upper right. I'd say it gets a passing grade. Remember, earnings is the engine that drives stock prices higher. With earnings growing like this, the stock's price is very likely to rise over time. And lastly, number 5, look for the best growth in income stocks. This is perfect for finding those great growth stocks and getting additional income through dividends. Let's take a look. Back here in the Unisearch tab, we stay inside the Prudent folder, and we're going to go down to the USA's best growth and income stocks. What's that? You don't live in the USA and you don't have this search? Don't worry. In a moment, I'll show you a 10-second shortcut to help you out. So let's look at this search. So I'm just going to double click on it to run it. In addition to having great safety and steady growth rates, these stocks give you added income through dividends. So if I scroll over to the right, you can see the dividend information yielding around 1 to 2%. Every little bit helps, right? These aren't just any dividends though. The dividends are growing nicely every year and are extremely safe. Oh, and remember, if you didn't live in the USA, watch this shortcut. If you don't have this search in your system, just go back to the ruler stock search, and all you need to do is change the sort. Just click up here, change the primary sort, scroll all the way to the bottom and choose VST plus YSG, and click OK, and presto changeo, there you go. Coming up with these lists in VectorVest seems easy, but it's the result of a lot of hard work. Fortunately, VectorVest does all the work. All you have to do is decide what to ask VectorVest to do. When it comes to preserving and increasing your wealth, go with consistent, predictable growth. It's the golden touch. All right, there are 2 things you can do right now. First, if you feel others will find this useful, please click the like button on the left-hand side of the screen. Second, if you're not currently a VectorVest customer and would like to try it out, simply click the link below to start your 5-week trial now. Have a great day, everyone.